The system never loses because it was never designed to play the same game you're playing. It was engineered to rebalance through you, through your reactions, your impulses, your hopes, and your fear-driven exits that feed a cycle older than any chart pattern you've memorized. A cycle that runs silently beneath the surface like a coded behavioral engine, waiting for you to do exactly what every other emotionally charged participant does when pressure compresses your rational thinking. Because the market isn't a neutral landscape where buyers and sellers negotiate fairly, but a dynamic extraction machine that harvests liquidity, sentiment, and collective psychology in predictable waves. And the reason the system never loses is that it doesn't need to predict news or earnings or geopolitical events. It needs only to predict you. And that's what cycles do with brutal precision. Because when you zoom out far enough, the market's giant macro swings stop looking like chaos and start looking like engineered recalibrations. Periods of expansion where the system invites you in with euphoria and rising prices, followed by controlled contractions where it resets valuations, wipes out overextended participants, and redistributes capital upward through forced liquidations, margin calls, panic selling, and emotional exhaustion. And if you've ever wondered why the moment average traders finally gain the confidence to go big is usually the moment the market turns against them, it's because the cycle requires fresh liquidity to power the next phase. And that liquidity often comes from retail optimism timed perfectly at the top, not by coincidence, but by structural necessity. Because sentiment indicators, options flow, volatility compression, and crowd positioning data all reveal exactly when retail traders are overexposed. And that's when the system shifts the phase, not to punish you personally, but to rebalance itself, because your loss is someone else's entry. Your panic is someone else's discount. Your capitulation is someone else's accumulation window. And that pattern has been repeating for decades, whether the asset was tech stocks, housing markets, crypto booms, commodity bubbles, or AI-driven hype cycles, each one following the same emotional timeline. Disbelief, optimism, thrill, euphoria, distribution, anxiety, denial, panic, capitulation, and anger, before the quiet accumulation phase begins again, while exhausted traders swear they'll never touch markets again. Giving institutions the exact environment they prefer, low retail participation, high discount valuations, and a silence where smart money enters calmly, while you recover from losses you think were random bad luck, when in reality, they were orchestrated extractions built into the structure of the cycle itself. And the reason the system never loses is that it controls the timing of transitions between these phases, using macro narratives, liquidity policy, rate decisions, unemployment numbers, and volatility injections, each one acting like a lever that guides emotional behavior at scale, because the market is not reactive but anticipatory, always positioning ahead of public news, giving insiders, institutions, and algorithmic systems the advantage of foresight, while retail traders only react to what has already been priced in. And that delay is where the extraction happens, where the majority buys late and sells early, where the majority mistakes noise for signals and misses the underlying rhythm of the cycle. A rhythm that feels random when you're inside it, but becomes obvious when you step far enough back to see that every high and low fits into a broader pattern of liquidity migration, institutional positioning, and psychological engineering. Because the market moves in ways that maximize crowd participation in the wrong direction. And if you've ever noticed how most traders feel the strongest urge to buy when candles look the most extended, or the strongest urge to sell when charts look the bloodiest, that is behavioral programming, not coincidence. The result of thousands of micro-reinforced patterns your brain learned through repetition, forming a predictable emotional blueprint that the system relies on to keep cycles functioning, because a market without emotional participants would not move the way it does. And it's your predictability that keeps it alive. What makes the system undefeatable is that it doesn't need to win every trade. It needs only to guide the cycle so that your behavior fills the gaps, because for every rally, there must be late buyers. For every crash, there must be panic sellers. For every breakout trap, there must be breakout chasers. And for every bottom, there must be capitulators who give up at the exact moment their liquidity is needed to finalize the reset. And this is why the system doesn't fight you. It waits for you, nudges you, guides you into the exact psychological corner where your survival instincts override your logic. And once you emotionally commit, the system flips the phase, leaving you exposed on the wrong side of the cycle, believing you made a mistake when in reality you performed exactly as expected. Because history shows the crowd always buys after strong uptrends and always sells after steep declines, creating the liquidity the system extracts to fuel its rebalancing process. And this is why the system doesn't care about individual wins or losses. It cares about the aggregate, the massive retail reactions that generate the fuel for macro movements. And as long as people behave emotionally inside a mathematically structured environment, the outcome will stay the same. The system will never lose, because it is coded to harvest your behavioral inefficiencies in cycles that disguise themselves as volatility, opportunity, and chaos, when in truth, they are simply recurring waves of extraction disguised as market dynamics. And if you've ever wondered why bull markets feel slow at first and then suddenly accelerate into a frenzy, it's because accumulation requires time, silence, and patience from institutions, while distribution requires noise, excitement, and narrative amplification that convinces the public they're missing out. And by the time retail traders finally feel safe, the seatbelt has already been removed and the brakes have been quietly cut. But they don't realize it until the first violent red candle appears. And by then, their emotional attachment to their positions prevents them from acting rationally, creating the perfect conditions for the cycle to flip and begin its extraction phase. Because fear always returns faster than greed, and the system counts on that asymmetry to speed up the downward movement, allowing smart money to buy back assets at discounts created by emotional exits, while the crowd moves through denial, anger, and regret, unaware that the system is already preparing for the next upward phase long before the bottom is obvious. Because bottoms are engineered in silence and tops are engineered in noise. And the people who lose the most are always those who follow emotions instead of structure, narratives instead of signals, impulses instead of patience, making them the raw material that keeps the cycle functioning. Generation after generation, just different charts, different assets, different news, but the same human reactions, mapped, measured, harvested, and recycled into the next systemic rebalance, ensuring once again that the system never loses. It simply resets through you, through your fear, your hesitation, your misplaced confidence, and your inability to detach from the emotional currents that the system relies on to keep its extraction engine alive. If this breakdown opened your eyes to how the system actually operates beneath the surface, then make sure you hit that like button so this video reaches more traders who still think the market is fair. Drop a comment below and tell me which part hit you the hardest, because your feedback helps shape the next deep dive. And if you're serious about rewiring your trading psychology and learning how to think like the other side of the trade, then subscribe right now and turn on notifications so you never miss another episode. Share this video with someone who still believes the market moves randomly, because the moment you see the structure, everything changes. Stay sharp, stay aware, and I'll see you in the next one.